Good morning and welcome to TOITOI Japan Market Radio. I'm coming to you from Tokyo on Sunday, February 22, 2026. This show is designed for global investors who track Japanese equities, rates, and currency markets, giving you the data and context you need to understand what's moving Japan today.
Thanks for having me. So let's set the stage. The Japanese market was actually closed on Friday for a public holiday, so we don't have fresh Nikkei or TOPIX closing prints from that session. That said, Thursday's action gave us plenty to talk about, and we're seeing some interesting momentum themes carry forward into the weekend conversation.
Exactly. And even with that holiday pause, there's been notable news flow around individual names and sector strength that global investors really need to be aware of. Let's dive into the details. The Nikkei 225 climbed 1.02% in the most recent trading session, and a big driver was TDK Corp, which soared 6.73%. That's a pretty significant single stock move.
It absolutely is. TDK is a core Nikkei 225 constituent and a bellwether for Japan's semiconductor and electronics component supply chain. When you see a gain of that magnitude, it's not just a stock-specific story. It tells you something about demand conditions in global electronics and semiconductors, sectors where Japan remains a critical supplier. A 6.73% rally suggests investors are pricing in stronger revenue visibility, possibly tied to export orders or improved pricing power.
And given Japan's economic structure, that semiconductor and electronics export strength really matters for the broader growth outlook, doesn't it?
Completely. Japan's trade balance and corporate profitability are heavily dependent on technology exports. So when a name like TDK moves sharply higher, it often signals that global demand for Japanese components is firming up. That's a positive read-through for the Nikkei and TOPIX more broadly. In terms of market impact, equity indices benefit directly from that kind of momentum. The 1.02% gain in the Nikkei reflects renewed buying interest, particularly in export-oriented tech and industrial names.
What about the yen and yields? Does this equity strength translate into moves in those markets?
On the yen side, risk on sentiment typically weighs on the Japanese currency. When investors get more bullish on equities, especially export-heavy stocks, they tend to rotate into higher-yielding assets, which can push USD, JPY higher, meaning a weaker yen. However, the magnitude of that effect really depends on broader global risk appetite and any policy signals from the Bank of Japan. On JGB yields, this kind of modest positive equity momentum alone is unlikely to materially shift the curve unless it's accompanied by inflation data or explicit BOJ policy changes. That said, sustained rallies in equities can gradually put upward pressure on yields through a risk on rotation out of bonds.
Got it. Staying with the equity theme, we also saw another positive session earlier in the week where the Nikkei climbed 0.57%, and this time Sumitomo Electric Industries was the standout, surging 5.6%. That's another large-cap industrial name making a big move.
Right. Sumitomo Electric is a major conglomerate with exposure to power transmission, automotive wiring, and infrastructure. A 5.6% rally in a stock of that size and breadth usually signals either company-specific good news, like an earnings beat or a major contract win, or it reflects renewed investor appetite for Japan's cyclical industrial and manufacturing sectors. The fact that the broader index gained 0.57% tells us sentiment was constructive across the board, not just isolated to one name.
So is this a sign that Japan's industrial sector is gaining real momentum, or is it more of a short-term sentiment bounce?
It's a fair question. The 0.57% gain is incremental, not a breakout move, but strength in cyclical industrials like Sumitomo Electric can be a leading indicator if it's driven by genuine demand signals rather than just positioning or flows. If this is tied to capital expenditure plans, infrastructure spending, or export order books, then it could have legs. For now, I'd say it's a positive data point that reinforces the view that Japan's manufacturing base is resilient. On the FX side, this kind of domestic equity strength alone doesn't usually move the yen much unless it shifts expectations around Bank of Japan policy. And on yields, without accompanying inflation or rate hike signals, equity gains in isolation won't materially change the JGB curve.
Understood. Meanwhile, in corporate news, we also had some analysis highlighting Furuno Electric's strong financials and competitive positioning. This is a mid-cap name, not a headline index mover, but it caught attention for its operational performance.
Furuno Electric is a specialized manufacturer focused on marine electronics, radar systems, and navigation equipment. It's not a household name globally, but it's an important player in Japan's maritime and industrial technology sectors. When a company like this demonstrates robust financials and competitive strength, it's a micro-signal that Japan's export-oriented manufacturing base is healthy, especially in niche, high-value segments. These kinds of companies serve global maritime, infrastructure, and defense markets, so strong performance suggests demand for Japanese precision equipment is holding up well.
Does that have any read-through for the broader equity market or FX?
On equities, it's a modest positive signal for sector-specific performance. It reinforces confidence in Japan's industrial equipment manufacturers, particularly those serving maritime and infrastructure segments. It could provide some mild tailwinds to the broader industrials and electronics sectors within the Nikkei and TOPIX. On FX, the impact is negligible. Company-specific strength alone rarely moves currency markets unless it reflects a broader trend, like a surge in export demand that could support the yen. And on JGB yields, there's no meaningful impact expected. Isolated corporate earnings news just doesn't drive government bond markets.
So bottom line, it's a positive micro story but not a macro game changer.
Exactly. It's worth noting because it shows that even below the headline index level, there's operational strength in Japanese companies. But for global investors trying to position in Japan equities or hedge yen exposure, this isn't the kind of news that shifts your overall view. It's more confirmation that the industrial export story remains intact.
Shifting back to the big picture, what are the key themes global investors should be watching as we move forward from here?
I'd say 3 things. First, watch the semiconductor and electronics supply chain closely. The strength in TDK and similar names suggests that global demand is firming, and that's critical for Japan's export outlook and corporate earnings. Second, keep an eye on the cyclical industrials. Sumitomo Electric's move could be early evidence of a broader capex or infrastructure cycle picking up, and that would be bullish for Japan equities. Third, and maybe most important, monitor the Bank of Japan's policy stance and any shifts in inflation expectations. Equity strength is great, but without policy normalization or inflation moving sustainably higher, it's hard to see a durable rally in Japanese yields or a structurally stronger yen.
And for investors who already have Japan exposure, is this a time to add, reduce, or just hold steady?
I'd say the environment is constructive but not euphoric. The equity momentum is positive, and there are pockets of real operational strength in Japanese companies. But we're not seeing breakout moves or major policy catalysts yet. For long-term investors, this is a good time to stay engaged, monitor sector rotation, and be ready to adjust if we get clearer signals from the BOJ or from global growth data. It's not a time to chase aggressively, but it's also not a time to disengage from Japan.
Really helpful context. So to recap for our listeners, Japanese equities showed solid momentum in the most recent sessions, led by semiconductor and industrial names like TDK and Sumitomo Electric. The market was closed Friday for a holiday, but the underlying trends suggest resilient export demand and constructive sentiment in cyclical sectors. The yen and JGB yields remain relatively stable, with no major policy signals to drive big moves in either direction. And while mid-cap names like Furuno Electric are showing operational strength, the macro picture is still one of incremental improvement rather than a major shift.
That's a great summary. For global investors, Japan remains a market where the fundamentals are steady, sentiment is cautiously constructive, and there's genuine earnings strength in key export sectors. It's a market worth staying close to.
Thank you so much for the insights today. If you're following Japan's markets and want daily updates like this, please consider subscribing to TOITOI Japan Market Radio. We'll be back with more analysis and data-driven commentary soon. Thanks for listening.